Hi, my name is Amirul Rosli and my matric number is 267753.
Assalamualaikum, my name is Zaihirah Binti Zainuddin with number matric 267998.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nafisah Binti Abdul Rahaman. My matric number is 265442.
Okay, my name is Nafisah Binti Abdullah. My matric number is 265672.
Assalamualaikum warahmatullahi wabarakatuh. My name is Norhidayu Binti Nasir. My matric number is 261087.
My name is MOHAMAD Fisol bin Abdullah Ghani. My matric number is 265617.
Hi, my name is Amirul and my matric number is 267753, and today I will story about the introduction of Islamic finance and banking. The Islamic financial system is based on the Sharia, which provide guidance in all aspects of life, such as religion, economic, social, moral and political, that offers balance between social and private interests. It also establishing economy and social justice that are the main principle of Islamic financial system, which eliminates the of riba, interest, gharar and Nasir, that promote risk sharing, encourage cooperation on goodness and piety, and avoid exploitation all of form. Now let us go back to the meaning of Sharia. Sharia is the code of laws that derive from the Quran and the Sunnah of Prophet Muhammad SAW. There are three components of Sharia. First is faith and belief, which also known as Al-Ahkam Al-Ihtadiyah. And then the second one is ethnic and moralities, that also known as Al-Ahkam Al-Akhlaqiyah. And the third one is human activities and relationship, which also known as Al-Ahkam Al-Amaliyah. The objective or maqasid of Sharia is to safeguard the welfare of people through protection and enrichment of five fundamentals, which is faith, human life, intellect, progeny and wealth. Next we will go to the principle of Islamic banking and finance. First, it is prohibition of interest or usury, we also known as riba. The first and most important principle is the both of charging and the receiving of interest is strictly forbidden. Investors must invest their money in Sharia compliant economic activities. Islamic financial institutions are expected to provide special service for those in need, such as providing sadaqah, interest and free loan. Okay, now I will story about the financial system, which are spread into two categories: organized and non-organized. In organized, we have the regulators, financial institution, financial market and financial service, while non-organized is money lender, local bankers, traders, landlords, bond brokers and cheat funds.
Now, I will continue this presentation with development and evolution in Islamic banking of Pakistan. In establishment Islamic banks in Pakistan, Pakistan facing two phases of challenging development. In Pakistan, during 1977 until 1978 was the first phase of establishment of banking and financial system. In this phase, it called it as Islamization of banking and financial system. In 1979, the Islamization measure included the elimination of interest from specialized financial institutions, including investment bank in Pakistan. So, in 1985, all commercial bank in 4 rupees was made with free interest charge. From previous, we can see Islamization of Islamic banking and financial system in Pakistan developed drastically. However, it is not shown a good sign for Islamic banks to adapt this Islamization. The problems in the first phase transformation are foreseeable for a dynamic market. As a stakeholder, they should be equipped with the latest knowledge of Islamic banking before entering into a formal launch of interest-free banking. Sharia compliant mechanism should preliminary win the vote of confidence and financial institution and customer at large. The second phase of establishment Islamic banks in Pakistan were caused by during 1991 Federal Sharia Court was declared procedure adopted by banks was declared un-Islamic. However, the government came to the conclusion that transformation of the financial system as a whole was not possible in short term due to a variety of factors and reasons. Developing a viable and complete model of Islamic finance and put it into practice was complex and difficult task, and it would not be wise to underestimate those difficulties and risks. Therefore, it was decided to promote Islamic banking on parallel basis with conventional system. State Bank has issued the criteria for establishment of Islamic banks in private sector and subsidiaries and stand-alone branches by existing commercial banks to conduct Islamic banking in a country. A full-fledged Islamic banking department has been created in the State Bank that would serve as a focal point for all matters relating to Islamic banking finance in the country. After the evolution and development have been made, Islamic Bank of Pakistan established well until now. So here are among list of developed Islamic bank in Pakistan. So we have Bank Islami, Islamic Commercial Bank Al Barakah, Dubai Islamic Bank, Mizan Bank, Bank Al Falah Limited, the Islamic Development Bank, Birch Bank and Amirul Islamic Banks. For the product and services in Islamic banks of Pakistan, applying the same concept of product and services as Malaysia, with using Islamic contract that follow Sharia compliance.
If in Malaysia we have a large number of Islamic or conventional investment banks that offer Islamic investment products, but in Pakistan, most investment matters are managed by Islamic banking institutions. Thus, the history of the existence and evolution of Islamic investment in Pakistan is in line with the existence and development of Islamic banks in Pakistan in 1979, when the government preliminarily decided to transform interest-based non-banking financial organizations like Investment Corporation of Pakistan, ICP, National Investment Trust, NIT, House Building Finance Corporation HBFC on riba-free basis. National Investment Trust NIT was previously investing in bond and stock portfolios. NIT was advised by the State Bank to invest its funds on interest-free basis. It stopped investment in fixed rate of return securities in July 1979. The Investment Corporation of Pakistan converted its assets and liabilities into profit and loss sharing modes in October 1980. ICP introduced a profit loss sharing investment scheme in October 1980. Under this scheme, the ICP accepted deposits and added its own share in proportion to 40-60. The funds thus collected were invested on the stock exchange and the profit was shared with the depositor in proportion to 60-40, but the loss was shared in proportion to capital invested by both the parties. During 1981 to 1985, the State Bank of Pakistan issued several instructions. Very briefly, it prohibited the banks to accept any interest-bearing deposits and provide finance by interest-bearing lending. Simultaneously, other financial institutions also started transforming their operations. By the 1981, all the main specialized credit institutions in Pakistan converted their operations into profit and loss sharing type financing modes. The introduction of the Usher, a form of charitable investment where a percentage of each donator's income is accumulated to help needy peoples, Ordinance in March 1983. For conducting Islamic banking operations in practice, the State Bank of Pakistan issued its Circular Number 13 dated June 20th, 1984 and approved the following 12 modes of finance to be used by all banks carrying out banking activities in Pakistan. One of the three categories in these financial techniques or modes are investment-related or type modes of financing, consists of first, musyarakah, equity participation, participation term certificates, and rent sharing.
Islamic capital market are playing an important role in raising long-term funds and thus playing their role in economic growth and development. In Islamic capital market, activities are carried out in accordance with Sharia principles. Therefore, it is assured that there is no element of riba, qara, gambling and all the other Sharia principles are met while conducting various activities. Sukuk, shares and mutual funds are important Islamic capital market instruments through which long-term funds are obtained from general public. Sukuk are the important component of Islamic capital markets and help organization in raising funds. Sukuk market in Pakistan is also growing with the passage of time. The first domestic sukuk in Pakistan was issued in year 2006 until year 2017. Sukuk of 67.90 billion ringgit Malaysia has been issued in Pakistan domestic market. In Pakistan, various Islamic banks has access liquidity and the issuance of sukuk has helped Islamic banks to make investment in sukuk market and increase their profitability. Most of the contracts that are taking place in Pakistan stock market are of the nature where seller at time of trading do not possess stock. On the other hand, basic principles of Islam are that one cannot trade anything without having possession of assets. As one respondent expressed this principle as basic principles of Islam, that you cannot trade until you have possession of asset. This principle were have from hadith. This thing is the big problem of the stock market that here normally traders do not wait for possession. Islamic capital market in Pakistan was handled by the Securities and Exchange Commission of Pakistan, which is SECP or the Commission. The capital market structure in Pakistan consists of the apex regulator of the market, the Security and Exchange Commission Pakistan, 3 stock exchange, mercantile exchange, Central Depository Company which is CDC, and a clearing and settlement company. The structure further includes intermediaries or market participants such as brokers which handle the transaction of share in the capital market on behalf of investors. The Commission accomplished great jobs of due for many years during 2017. They keeping in view the changes in the corporate business environment, impact of globalization and technology, and evolution of Islamic financial market. It revised the Company Ordinance 1984 and promulgated the Companies Act 2017 on May 30, 2017. For the first time ever, the concept of Sharia compliance companies and securities has been given in the Act. In addition to Sharia compliance companies and securities, the Company Act 2017 has provision for Sharia compliant, Sharia advisory and Sharia audit. Sukuk market in Pakistan provide opportunity for both government and corporate entities to raise funds in the Sharia compliant manners, especially in the wake of China-Pakistan Economic Corridor, which is CPEC. The major challenges for Pakistan was the first one is identification of asset for issuance of sukuk, second one limited issuance of sovereign domestic sukuk, the third one limited availability of short-term instrument, and the last one absence of effective secondary market.
I will proceed to the history of takaful in Pakistan. In 1979, the first Islamic insurance company was established in Sudan. In 1984, the first law was enacted in Malaysia to regulate the takaful industry. In 1997, Asian Re Takaful International was established. In 2003, Ijtima of Ulama of Pakistan was held in Jamia Darul Ulum Karachi to discuss about the permissibility of takaful. In 2005, the government of Pakistan issued first takaful rule to regulate takaful operation. Lastly, 2006, first takaful company was established in Pakistan. Model of takaful. The first one is Mudarabah model. Under the pure Mudarabah model, the takaful operator and the participant share direct investment income only, and the participant is entitled to 100% share of the surplus. By this principle, Al-Mudarib or the entrepreneur will accept the payment of takaful installment or takaful contribution termed as Rasul Mal from the capital provider, which act as Sahibul Mal. The sharing of profit may be in the ratio of 50-50, 60-40, 70-30 or so on, which is mutually agreed between the contracting parties. Next one is Wakalah model. In Wakalah model, the surplus of the policyholder fund investment, such as the net of the management fee or expenses, goes to the policyholder. The shareholder charge a Wakalah fee from the contribution that cover most of the expenses of the business. The fee rate is fixed annually and in advance in consultation with Sharia Committee of the company. In order to give incentive for good governance, management fee is related to the level of the performance. Last but not least is Wakalah Wakaf model. An extension to the Wakalah model is the Wakalah Wakaf model, in which the risk-related component of the takaful contribution is pooled in a separately formed wakaf pool. The overall takaful contract is administered by takaful operator as a wakil under a wakalah arrangement, while only the investment portion of wakaf pool is administered by takaful operator as mudarib under mudarabah contract. Takaful companies in Pakistan. The first takaful company to operate in Pakistan was Pak Kuwait Takaful Company Limited, who began its takaful operation in the year 2005. Whereas currently there are 5 takaful operators comprising of 3 general takaful and 2 family takaful companies. As you can see, the general takaful company, which are Pak Kuwait Takaful Company Limited, Pak Qatar General Takaful Limited, and also the Takaful Pakistan Limited. For the family takaful companies, which are Pak Qatar Family Takaful Limited and also Dawood Family Takaful Limited.
Now, I will present for the challenge and solution Islamic financial system in Pakistan. For the Islamic banking, the first challenge is fiqh methodology. Sharia scholars conclude their finding on basic principles of Sharia, but those Sharia ruling only without brief interpretation and reasoning to a common banking practice. Second, penalty on defaulter. Since Islam prohibits taking interest as such penalty for late payment is not allowed in Islamic finance, so it is a big challenge to introduce Sharia compliant mechanism to review introduction of penalty on defaulters. The third, regulation and control. Banking need to correlate Basel requirement with Islamic banking. And the fourth, legal framework need to pay attention for introduction of necessary change in the banking laws and others related law that affect Islamic banking. So the solution is setting up unresolved issue and availability of Sharia compliant product. Second, development of high potential resources well-versed. Increase the knowledge base of customer, staff, and general public about the importance of Islamic banking and finance. And the third, institutionalizing legal, regulatory, and other policy framework complying with Sharia principle. And the fourth, penalty clause should be incorporated for delay repayment of finance. For financial market, the first challenge is the building market participant cost due to a lack of incentive for issuer, strict regulatory structure, absence of a diversified portfolio, lack of sufficient finance for dealers, and the absence of a hedge market and instrument. The second challenge is the lack of commitment on the part of the government as well as lack of coordination among them hinders the development of a bond market. The third challenge is the unstable macroeconomic environment, which creates uncertainties among investors. And the fourth challenge is the lack of auction schedules, market pricing mechanism, and yield curve. So, the solution is for the first challenge, equivalent a regulatory structure without sacrificing prudential standards and removal of unnecessary information disclosure. The second solution is have one single authority that would create a balance in regulatory structure and better coordination between market participants and policy makers. And the third solution is policy should also be implemented for a system of non-discriminatory taxation system to encourage market growth and promote market participation. And the fourth solution is establishment some policy for developing a market for government bonds. For Takaful, the first challenge is a lack of awareness. As responsible to provide a full information about Islamic principle of business, as consumers are fully aware about the mechanism, product, and the benefit of conventional insurance. The second challenge is claim settlement. Takaful companies facing this problem as their claim settlement are not satisfactory due to several reasons. The third challenge is tough market competition. Being a small part of this huge industry, only for 0.2%, Takaful companies are facing a large number of challenges to overcome the monopolistic position of conventional insurers in this country. The fourth challenge is the reinvestment. Consumers do not have complete access of the information and record. There is still an ambiguity in their minds that these companies do not follow the Sharia principle. So the solution is Takaful company should play their role positively and effectively to provide proper and complete knowledge of this information to the consumer. The second, to make valuable reform in their claim settlement process so that their trust toward consumer can be strengthened further. The third, the only way to be in this competition and to get a reasonable proportion, Takaful company have to develop further by providing new Sharia compliant product and to provide excellent service to their consumer. And the fourth, Takaful company should make it clear that in which business sector they are investing so they could be satisfied. To be concluded, our primary focus is to determine the understanding level of general knowledge about the evolution and development of Islamic financial system in Pakistan, its present progress and future expectations. We have identified that there is still limited knowledge base of Islamic financial system, for which educational institutes and financial institutions themselves should take a lead and arrange courses for Islamic bankers and customers. Once level of awareness will increase the market share of Islamic financial system, it will automatically shift to double digit from present position at single digit. Lastly, Islamic scholars should also require enhancing their capacity and producing more scholars in the banking industry to make sure as long such ruling not deviate from the fundamental teaching in the Al-Quran. That's all from our groups. Thank you.